Welcome in again to another episode of the Crypto Dojo Show, where we discuss everything that you should know about the world of crypto. And I appreciate all my Dojan friends for tuning in. And today we are going to discuss more legislation. There's a lot going on in Washington right now. It's hot. These are hot topics. So in this video, what we're going to be looking at is the Fit for the 21st Century Act. And what we're going to do is watch a quick video of Mr. McHenry giving some remarks about the act, and then I'm going to pull the actual information up on the Financial Committee website and kind of just go over some things on it. So, without further ado, we'll let Mr. McHenry take it away.
The Fit for the 21st Century Act is a historic first step to give regulatory form to the financial system of the future, the digital asset ecosystem. We see many faults and failures with the current regime. Major crypto exchanges currently today have no federal law that they operate under. The Securities and Exchange Commission and the CFTC are arguing over jurisdiction. Congress created the agencies, and when they haggle, they either go to the courts, which they've done, and the courts resolve it. We've seen a case via the Ripple lawsuit that Mr. Sherman referenced. It provides less clarity and less consumer protection for average everyday investors than it does for institutional investors. It is in Congress's interest to remedy that. It is in Congress's interest to remedy the dispute between the CFTC and the SEC amidst $1 trillion of consumer harm. Foreign actors operating here domestically and consumers having their money taken. So we need to clarify this for consumer protection, number one. And number two, for innovation to be able to flourish. Legitimate money to invest in legitimate products and institutions that can enable some greater public good. There's huge potential here. The ranking member and I agree about the huge potentials here. This is an innovation in part in traditional securities law on Maine. The dispute between this committee and the Agriculture Committee that has oversight of the CFTC is real. We could either haggle and consumers continue to get harmed and Americans get defrauded and less innovation here in America and those innovators going overseas and their tax revenue to my friends. Or we can remedy it. We can stop the haggling. We can have an understanding that the Agriculture Committee and the CFTC, which we've got many ag members on this committee, including the ranking member of the ag committee. They have consumer protection here. So what we have here is a pathway by which you can raise money in a securities regime. You have the consumer protections of the securities realm for investment purposes. And if you have a true innovation that is decentralized in a functional network, then it operates like a commodity, it then leaves the securities regulatory remit and immediately goes into consumer protections and a regulatory remit in the CFTC. Now, we rarely do joint referrals in committee and Congress well. We have primary referral of this bill that Congressman Hill has led this effort on crafting. We've had 2 bipartisan page turns. We've spent 5 hours with a text open with groups of experts to look at the text. We've had huge feedback from both Democrats and Republicans on this bill and the industry, innovators, consumer protection advocates, and we've taken as many of those things as possible and built it into the text here. We've made some choices, yes, and maybe they're not perfect, sure, and we'll hear about all those things. But there is no commingling. The worst practices of FTX are banned in this bill. It is better, in worst case, than what we have currently, which is no consumer protection. And the hopes that the court will understand the complexities of securities and commodities laws and the technology. We have to wrestle with it. It's Congress's obligation to wrestle with it. But how we got here was a collaborative process. A number of hearings, a large number of hearings. An unprecedented bipartisan page turn to go through the text of the bill, to hear feedback, to make it better, to make it right. We didn't have this for major bills in this Congress. In fact, the first time I saw that happen was when we did this 3 weeks ago in committee, and last week when we did it again. How we got here, though, is the work of Glenn Thompson and the Ag Committee and his legislating in previous Congresses. It was unprecedented and unparalleled leadership of the Republican whip Tom Emmer in his approach to defining and clarifying securities law for digital assets. He has been a foremost advocate here. It's the work of Warren Davidson and his legislating to provide that clarity. It's the focus on innovation and fintech in the work of French Hill that has led us here, and my Democrat colleagues who have participated in mighty ways, as I think we'll hear in this markup, in important ways to make this better. And I urge you, whether or not you like digital assets and think it's the future, or you think it's the bane of existence, we need to pass this bill, and consumers and Americans will be better off for it, whether you like it or don't like it as a technology. With that, I yield back.
Okay. And that being said, the two key points that he had in his statements were that this bill is for the security for retail investors, is for consumer protection for retail investors. That's one part. And then it's also to give rules and guidelines so that entrepreneurs and creators who want to operate in the space have the space to do so without feeling like they're breaking any laws, and that they may, get subpoenaed by the SEC or the CFTC for raising capital, or however they're approaching their business. Because it is something new and there are no laws, it can be difficult for entrepreneurs to try to create things. And there are other jurisdictions on the globe who are already ahead of the United States right now. So we have this Fit 21. The EU has MiCA. So they're already ahead. So I mean, what you could see is, without this, developers leaving the United States and going to more friendly jurisdictions to where they can create and not feel like, they'll get in trouble for whatever it is that they're creating. So it's important. So boom. So now the House is to consider the Financial Innovation and Technology for the 21st Century Act. Let me see. What part of this do I really want to go through? So, and I'm not sure exactly what day they're, but I know it's before the end of this month. Before the end of May, they're gonna have this this vote. Let me see. Yeah, so let me just go through this. So on May 10th, this came out. Press release. Today, the House Committee on Rules publicly noticed its intent to consider the Financial Innovation and Technology for the 21st Century Act, clearing a pathway for a floor vote later this month. Yeah, see, the Fit for the 21st Century Act is an important first step towards achieving regulatory clarity for digital assets. Fit 21 provides the robust time-tested consumer protections, and regulatory certainty necessary to allow the digital asset ecosystem to flourish in the United States. Yeah, I'm gonna just skip down here. And I might make another video where I go like more deeply into the actual document itself. This is more like a PSA video, but I may make another one where I'm really just in the document itself and really picking it apart and seeing what they got going on in there. But let's see here. On July 20th, 2023, Chairman Glenn Thompson, Representative French Hill, Representative Dusty Johnson, Whip Tom Emmer, and Representative Warren Davidson introduced H.R. 4763, the Financial Innovation and Technology for the 21st Century Act. Chairman Patrick McCreary is a co-sponsor of the legislation. FIT 21 establishes clear and functional federal requirements over digital asset markets. It provides the robust consumer protections and regulatory clarity necessary for the digital asset ecosystem to thrive in the U.S., cementing American leadership of the global financial system of the future while reinforcing our role as a hub for innovation. The legislation provides the Commodity Futures Trading Commission with new jurisdiction over digital commodities and clarifies the Securities and Exchange Commission's jurisdiction over digital assets offered as part of an investment contract. Additionally, the bill establishes a process to permit the secondary market trading of digital commodities if they were initially offered as part of an investment contract. Finally, H.R. 4763 imposes comprehensive customer disclosure, asset safeguarding, and operational requirements on all entities required to be registered with the CFTC and or the SEC. FIT 21 will protect consumers by strengthening transparency and accountability with market participants. So that is part one of what Mr. McCreary was saying when he was making his opening comments. Digital asset developers will be required to provide accurate, relevant disclosures, including information relating to the digital asset project's operation, ownership, and structure. And digital asset customer serving institutions like exchanges, brokers, and dealers will be required to provide appropriate disclosures to customers, segregate customer funds from their own, and reduce conflicts of interest through registration, disclosure, and operational requirements. So this is going to make the space safer. So there are in what you do. Another important thing about this is when this comes into law, a lot of projects may not be able to adhere to this. So it's time to, really be careful about what projects you are participating in, what projects, you are putting your money towards. And the reason why is because there's over 10,000 cryptocurrencies. Most of those are, I don't want to say fraudulent projects, but they're not doing anything. They're not. Some of them are fraudulent. Some of them are people looking to capitalize off others putting money in their tokens. Some of them, they may not intentionally be bad actors, but they also may not be able to adhere to these guidelines. So what we're going to start to see is a decrease in the number of existing projects because of this legislation. So warning, 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 warning. There are already projects who do these sorts of things. There are already projects that provide disclosures. There are already projects who have been adhering to things that make sense in terms of what they should be doing, as far as protecting themselves, protecting their clients, protecting investors. Even though there weren't any laws, they were doing what you would expect a legitimate company to do. So it may be a good idea. This isn't financial advice, but when you're looking at projects, it may be a good idea to know what it is that you're holding. You want to know what it is that you're holding. You want to look and see if they have a website. You want to look and see who's behind the project. Who was it created by? Who are they partnering with? Do they have a white paper that lays out the roadmap for what this project's use case is? If the project that you're dealing with doesn't have these things, warning, 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 red flag, red flag. So just be aware of that. Fit 21 will strengthen the market by protecting digital asset projects. Digital asset developers will have a pathway to raise funds, and participants will have a clear process to determine which digital asset transactions are subject to the SEC's jurisdiction and the CFTC's jurisdiction. Fit 21 will protect digital asset customer servicing institutions by establishing clear lines between the SEC and CFTC and creating comprehensive registration regimes to prevent them to lawfully serve customers in digital asset markets. So, I mean, 2024 has been a great year. Bitcoin halving, we have Fit 21, we have the blockchain bill, deploying American Blockchains Act of 2023. It seems like everything is starting to come together. It seems like things are starting to come together. I've been in this space since like 2020, and I've seen so much growth. I've seen so much change. One day in crypto is like 5 years. Everything is moving so quickly. So it's just amazing to see us get to this point. It's just amazing. If you've been in this for a while, and I'm sure even people who have been in it longer than myself, if you've been in this space for a while, it's just something that's amazing to see. Yeah, so we're looking forward to seeing what comes out of this vote. I hope they are able to push it through. Again, I may do a video where I dive a little bit more deeply into that the piece of legislation, just to see really what's in it. But yeah, frame of reference phenom. Use this as a frame of reference. It's definitely going to, as we move closer towards, the presidential race, is gonna be a point of conversation. It's gonna be a point of conversation, and so, it's good to just be aware of, even if you're not even participating in the space, it's really, even if you're not participating in the space, you're gonna be participating in the space, because what's happening is a change in the global financial system. It's not even just in the United States. This technology is about to reshape how we interact with each other financially. Everybody. So you may be using this technology and you're not even aware that you're using it. But it's about to reshape how we do a lot of things financially. So with that being said, as always, my Dojan friends, I really appreciate you for tuning in to another episode of the Crypto Dojo Show. Where here we discuss everything you should know about the world of crypto. Have a good evening, good night, good morning, good afternoon, whatever time it is of day or night that you may receive this message.